Hi there, good afternoon, and you've tuned into the newsroom with me, Cheryl D'Souza, and a lot of earnings actually trickling in. And you also had Welspun Corp that came out with their numbers earlier this week, and a strong set of numbers coming in from Welspun Corp, a sharp uptick in their PAT and their margins as well as revenue, if you look at it on a quarter-on-quarter basis as well and year-on-year basis as well. But let's bring on board the management of Welspun Corp to exactly understand what actually led to a strong performance in the quarter gone by. We're joined by Mr. Vipul Mathur, who's the MD and CEO of the company. A very good afternoon to you, sir. Thank you so much for joining us on ET9. And firstly, let's talk about the strong numbers that you've actually posted a quarter ago. If you could tell us what exactly transpired in the quarter gone by and what sort of contributed to such a strong performance.
Very good afternoon, Aisha. Thank you very much for having me on the show. And I was just listening to Mr. Manish Chokhani, my fellow colleague on my board, prior to this interview. But nevertheless, I think so. It has been a very strong performance of Welspun Corp in this particular quarter. I think so. But it is in two sequential quarters. If you see the quarter one and the quarter two, our performance has been absolutely robust. I think so from a revenue perspective also, as well as from earning perspective also. And in this particular quarter, I think so the majority of the earning is basically coming out from our US operations. Very strong US operations performance is getting reflected into this particular quarter.
Right, absolutely. Mr. Mathur, there is Cheryl on the other side. And also, yes, I was just going to point out that Mr. Chokhani also spoke about how globally things are working in favor of Welspun Corp and how you've been a beneficiary as well of what's transpiring when it comes to the oil market or for the matter of fact in the steel sector globally. Let me talk some more about your numbers. So you've actually reported an 8,100 crore rupees in H1. If H2 also turns out to be much better, will you easily surpass your guidance of 15,000 crore rupees guidance that you set for FY24?
Certainly, I think so. We are pretty much on the. I say we are pretty much on the track on this. It was a very calculated, thought-through guidance which was given to the market. I think so. We are very much on the track. And if you look at the H1 performance, I think so. We should be able to get there, if not exceed it.
Also, if you could help us with some guidance, forward-looking guidance, at least for your margins going ahead, maybe in the next 2 to 3 years, or for the matter of fact in FY25 itself, what sort of a margin guidance are you working around with for your company?
So, let's say we have a clear-cut guidance given for this financial year in terms of our EBITDA margins as well, right? So, we have given a guidance of 16,000 crore rupees on revenue and almost 1,600 crore rupees for our EBITDA. And if you see, we have already touched almost close to 920 in the H1. And with the type of the order book, what we have in the quarter 3 and in the quarter 4, and what we are going to execute, I think so. I have no doubt whatsoever in terms of achieving our guidance. Rather, we might exceed it, but that's time will tell us. The other thing, how the next 2 years going to look like, I think they're looking extremely promising. At the end of the day, there is a tailwind across the oil and gas sector. Across all geographies, you see our American business is doing extremely well. Our Saudi business is doing extremely well. India business is fairly good. And India business is static, but India business for export is extremely well. Oil and gas space is doing extremely well, number one. And we being present in India, in Saudi, and in US, at all the 3 locations, we are getting the benefit of that. The second business, which we are heavily into, is our DI pipe business. And our productions have significantly ramped up. And the market demand is also significantly growing up. So I think so over the next 2-3 years' time, this business will grow exponentially from here. The third business, what you see, is our Syntex. We are just 6 months old, 7 months old into the Syntex acquisition, what we have. And the type of traction what we are getting in the market, in terms of acceptability, in terms of the potential to grow that particular business, I think so they are very, very encouraging signals we are getting at this point in time. So oil and gas, the Syntex business, and this DIP business, these 3 businesses put together, where the demand, there seems to be huge demand, there seems to be a big tailwind. I think so that is where we will be riding our growth for the future for the next 2 or 3 years.
Definitely spoken about how the demand environment is good across for your segments. If you could tell us what sort of an order book are you sitting at currently right now?
So today, let's say we have on our large diameter pipe side of our business, we have an order book of close to 600,000 tons plus, which is currently valued at $1 billion. And this is excluding Saudi. As I told earlier as well, Saudi is a different ballgame altogether, and we have an order book of more than 2 years there. And so Saudi is a very different dynamics. So all what apart from Saudi, we already have 600,000 tons of an order book at this point in time, more valued at $1 billion. Apart from that, on the DI side of it, we have almost an order book for almost close to 1 year, if not more, and that is additional 2,000 odd crore rupees. So from an order book perspective, from a clear visibility, we have for the next 3 to 4 quarters.
Also, let me talk about your debt figure. Your net debt actually has fallen from about 1,800 crore rupees in December last year to about 315 crore rupees as on September 30th. Net debt free by next quarter end is what we can expect. Is that the goal?
I will refer back to the guidance. We said that we should be a net debt. We would have a very minimalistic debt of something like 200 odd crore rupees by the end of this year. We are trying to breach that. We are trying to work that we should be a net cash rather than net debt. But what is more important to recognize is the trend. In this particular quarter itself, we have been able to reduce our net debt by almost 500 odd crore rupees. And I think so these are encouraging signals. All the businesses what we are currently in are generating sufficient free cash flow in order to reduce our net debt. I think so this journey will continue. We are very clear that we have to deliver what we have promised.
But let's talk about the fact that you're seeing a strong growth going ahead, a strong growth environment. You said the demand is pretty good, but you've only guided for maintenance capex in FY24. Why is that? And if do correct me if I'm wrong on that particular front.
No, you're absolutely right. See, we came back with a major capex a year back. So we were in a capex mode for 2 years. And so that is the reason for this FY24. We only wanted to give a guidance for maintenance capex. We do know, and so that all the capex what we have done, they should start throwing returns around that. Now, I think so. This is the way we will be. Let's say this year we will continue. Next year, when we are again a net cash company, and the market is going, then I think so we will see some capex coming back in the DIP. Today we announced a little bit of a minor capex in our DIP business, which is nothing else but is a mismatch. Fortunately, we are producing much more hot metal than we anticipated. So the technology what we adopted, really helped us a lot. So in order to eliminate that mismatch between the hot metal and the DIP, we announced a minor capex of some 300 odd crore rupees, which we'll be doing over and above the maintenance capex this year, and that also will be split over 2 years. So, right, this year, other than maintenance capex and this small capex what we have announced for the DIP, nothing much. And then we see how the market looks like. How is the balance sheet looking like? Our capital allocation policy is very, very judicious to that impact.
All right, then, on that positive note, an optimistic note, Mr. Mathur, we'll let you go on that note, actually. Thank you so much for joining us on ET Now to talk about the quarter that transpired for Welspun Corp. Also talking about the positive demand environment, the order book, as well as leaving us with some sort of guidance when it comes to your revenue and margin. Thank you so much, Mr. Mathur. It's a pleasure talking to you. And that was the management of Welspun Corp. That was Vipul Mathur, who's the MD and CEO of the company.